Welcome back. Let's get a market conversation going now. Some perspective at the end of what's been a week of relief for the Indian market. We have Prashant Khemka, founder of WhiteOak Capital Management, joining in. Prashant, always a pleasure listening into you. Thank you so much for being with us. And that's exactly what I was saying, right? Finally, a week of relief when India's outperformed as chaos and turmoil and confusion has gripped a lot of global markets. So that's really the question that, we don't want to get ahead of ourselves, but one can't help but start feeling a little excited that with the US market faltering, things a little confusing on tariffs over there, with these, will these elusive FPIs, will they finally start looking at India after the correction?
It is true that over the last few months, the massive selling that we've seen in India, in our assessment, is in great part to do with everyone around the world, big institutions, HNIs, or retail investors, they're all flooding money into the US and taking it out from elsewhere. Yeah, and it's not about negative about India as much as it is negative about or more positive about US compared to everything else. Now, in case this little bit of volatility in the US, whatever it may be attributed to, if that leads to reassessment of that of investors' sentiment or investors' viewpoint that US is the only place to be, then yes, all other asset classes would see some relief. Yeah, but it's very hard to say. It's, markets are, not, I correct myself as I correct everyone else. I correct myself. It's not just very hard to say, it's impossible to say how this would evolve going forward. But yes, as of now, market in US after some while has been more choppy than the unidirectional manner it was rising.
All right. Hi, Mr. Khemka. Good morning and always good to hear your thoughts. Plenty of moving parts, right? Difficult to call which side the market's going to go. But fair to say that post this correction that we've seen in the Indian markets, the headline index is down close to 15%. Individual stocks are down 20, 30, 40%. Do you think bulk of the bad news is in the price, or is the call for a sharper correction from here on? I want to understand how you're feeling about the Indian markets.
Sure, Nigel. So I generally tend to always believe it's a good time to invest and not try and time the market. And today, particularly after the drops that you mentioned in the headline, larger cap indices or broader indices, yes, I think the froth is out. So all the more reason to not worry about, though ironically, when markets go down like this 10, 15%, even those who think of themselves as long-term investors, they start worrying about it and try to, play the impossible game of trying to pick the bottom or time the market. But I would say for any long-term investor, it is a very good time to stay invested. And if they aren't invested or have some money in cash, to deploy that. For short-term investors, I can only wish good luck as always, because that's what they need.
So, Prashant, the other issue is, like you're saying, it's impossible to predict which way the wind blows in the US with all this tariff business. But let's look at what's happening here at home. This whole sell-off was also triggered because of the concern around the Indian slowdown and, earnings trajectory, so on and so forth. So even if FPI money starts to come back, and when it does, we don't know. But the slowdown concerns here, do you think they are now fully priced in? And now we should look at a recovery in terms of both earnings and overall macro data?
Surbi, as you very well know, at any given point in time in the market or the economy and all these put together, yeah, the global politics and global economics, national politics, national economics, equity market and all the things associated, corporate earnings, and the various macro indicators. There are, as in Hindi you say, satra. So there are satra things that are right, or 17 things that are right, and much more than 17, but let's say 17 things that are right and 17 things that are going wrong. Now, when markets are doing well, as they were till not long ago, people, everyone in media and investors and fund managers, they all tend to focus on and highlight those things that are going right. And when market, wobbles or pulls back a little, everyone prefers to chooses to focus on the 17 things that may not be going right. Yeah, so all this slowdown in the past, whatever many years you pick, 5, 10, 20 years, there have been numerous such slowdowns that have come along the way. Yeah, even if you take the last, 11 years or so of Modi regime, there have been a number of times that slowdowns have occurred. But then, that's part and parcel. You won't have a 6% GDP growth like a smooth line. Just like we haven't achieved that over the last 30 years, where our average has been 6%, we've not achieved it in a smooth line. And the same way, we haven't achieved whatever 12 odd percent annualized return that the market has given over the last 30 plus years, since early 90s, since liberalization. We haven't achieved in a straight line, and we're not going to achieve that in a straight line. These ups and downs are going to come. 3 to 4 months, 3 to 6 months ago, everyone was complaining, market's too high, I'll wait for a correction. Now, when there is a correction, everyone was worried, oh, this thing is going bad, that thing is going bad. Nothing is much different from what it was 6 months ago. It's just that people are now choosing to talk more about those things, those 17 things that aren't so rosy. And now that you have a correction, you want to wait for everything to be rosy. Everything's never going to be rosy.
Okay, all right, Mr. Khemka, good to hear your thoughts. A short point, I think you're sounding bullish on the markets. You believe, as always, for a longer-term investor, it's a good time to buy post this recent correction, and you're not too worried about the near-term, uncertain patch that we're likely to see. Thanks a lot for joining in, but we look forward to having a longer conversation with you in the coming weeks as well.
Likewise. Thank you.
Well, as